That's right. It's time for fresh momentum to be injected in India-UK bilateral trade relationship with the free trade agreement between both the sides coming into effect today. Two major economies of the world with GDP of more than $4 trillion have struck this deal for a larger roadmap for economic collaboration. And remember, this was announced by Prime Minister Narendra Modi and UK's Keir Starmer at the G20 summit in France in June. So, of course, as far as this trade agreement is concerned, well, it provides meaningful market access across goods and services. It's mutually beneficial, but it also safeguards sensitive sectors for India, and that includes dairy and cereals. In fact, the same holds true for UK's sensitive sectors as well. This bilateral trade deal is expected to expand trade to $100 billion by 2030. Now, as far as major beneficiaries are concerned, well, textiles and garments for sure, leather and footwear, gems and jewelry, auto components, engineering goods, all of these are big winners. And of course, they're big winners because we do have our neighbors, in Southeast Asia who are also exporting to the UK. But we do have a trade deal, a very, very competitive trade deal with the UK. And of course, there is an expectation that India is going to gain big out of this. Now, India's Commerce Secretary Rajesh Agarwal stated yesterday that this FTA safeguards India's sectors, specific sectors like dairy, cereals, gold, jewelry, smartphones. And this is aspirational and it's balanced. Now, as far as double contribution convention is concerned, that's a key highlight because it's going to be a game-changing feature for Indian employees who are working abroad, and they will not need to pay doubly. So that's a big victory for the services sector. In fact, what we are also given to understand is that there is going to be professional benefits due to predictability and due to mobility commitments that are part of this FTA. As far as the auto sector is concerned, well, India has given concessions to the UK in the form of quotas for vehicles, and an overall quota of 37,000 vehicles annually has been given. In fact, there are no concessions on EVs till year 5. So lots of sectors in focus, and of course, how this really plays out, that will be interesting to watch.